Alright, good day ladies and gents. Hope you're all having a fantastic day. It's been a while since I uploaded. I've been busy, stuff got in the way, but today I'm going to start by sharing a little bit of how the Ftmo challenge unfolded. Well, as you can see, I didn't pass. Um, but if you want to watch the revisions to my strategy, then you can skip ahead and check that out as well. Okay, let's get into this. So, I've had this challenge since August 2022, and finally, I didn't pass. I've had a couple of repeats, and I didn't pass. See, for me, I see this as an absolute net win because I know how I was treating. I was trade. Can't even talk, bro. Can't even talk. I know how I was trading here, and seeing how far I've come to this point, I'm very grateful. Let's get into the analysis and share a little bit of what happened. So you see, before this challenge, I was pretty confident because when I got the repeat for the last one, I knew I had to do some revisions to my strategy. And one of the things I thought of was distilling my strategy to a checklist, which was a bit of a double-edged sword because while it made me more, well, I've built discipline over the months trading, that's for sure, but having a checklist made things slightly easier. It also, on the flip side, it also made me complacent, because I only come to the market when there's something to trade, and when there's nothing, I literally don't even check anything. Um, so it made me complacent. I stopped studying, and it didn't really make it easy to review the flaws in my checklist. So when the flaws were revealed, I just had to get that revelation the hardest, well, the worst possible way, which was through the challenge. In the past 2 weeks, I've been doing a lot of studying. I've created a different session for my journal. That's my editing software, by the way, called Reading Price is Fun, because I've been doing lot of um, a lot of work like that, and all these things that I've learned have reviewed a lot of things that I was missing as far as my strategy is concerned. There's no many interesting things here because I just kept losing in essence. The thing was my psychology was very much still intact. I still had the mental capital, so I was still risking as much as I decided to, and even had some momentary wins here, a big one here. And on the last day, I decided to risk 4% because it was the last day, it was the final trade. I decided to risk 4% to see if I can pass the challenge or at least get out of drawdown. And I did technically get out of drawdown. I didn't close the trade because I'd already breached the max daily loss. So that's what I'm going to share first. And then the price action for today, which is the 17th of May, and use that opportunity to share the revisions I've made to my strategy and things that I've learned along the way. So let's get into that. Okay, so this is that setup right here. So it's on pound dollar, and currently I only trade euro dollar and pound dollar. Even that's even what I used for the challenge that I did and failed. So it's all I'm gonna stick to going into the future. Maybe I'll add more pairs, but for now these two are all I trade. So as you can see, we've had very little clarity in the markets lately. This was just a messy consolidation, and but price took out these highs and then this one as well, tapped into the rest of the imbalance here, and then we had a market structure no, we didn't have a, yeah, we did, I just missed the position. Market structure shift when price took out this low and left a pretty big fair value gap. So the whole point of yesterday's idea was I want to see price come here and then create a 15-minute setup which I can use as my point of interest. You see, going forward, this is something I'm also experimenting because when price came here, and we had this high taken out by this move and then the market structure shift, I could have made my entry right here on the 15-minute chart and then sell to the next drawn liquidity on the daily time frame, which would be the sell side down here, right? Sell side liquidity down here. But that's something for another video. Um, the classic idea I have is when price leaves this imbalance, I'm waiting for price to come back up in there and then look for my setup. So there reviews the first revision to my strategy. Point of interest here, two fair value gaps here, that's me foreshadowing something that happened later, but let's just get on the 1 minute chart so I can share what I mean. Normally my strategy is, well, I first identify drawn liquidity, which in this case, if price retraces and we close, well, it's already this sell side down here. That's the first place I'm looking at. Sell side liquidity down here. Let me name it as such. Okay, great. Now on the 1 minute chart, I'm waiting to see price come up into this fair value gap, this point of interest. When it gets there, I'm waiting for a market structure shift, and then I'm entering in the fair value gap. That's my strategy. The problem is I didn't account for one very important thing, that when price gets in here, I have to anticipate another liquidity grab. And I took a lot of losses trading like that. But I can show that better as we go forward, because on this day we didn't even have the situation. There was news at 8:30, and the news kind of messed up my point of interest. I really don't like when this happens. So when I was watching, I'm like, okay, man, this is quite confusing, because afterwards, this is what they did. We've taken sell side, yes, but that's not the only drawn liquidity. Like I said, I built the narrative from the daily bias. I used the daily point of interest to build the narrative. So there's the low of the it was the low of the day. I misnamed this. There was the low of the day right down here, and I anticipated that getting taken out as well. So after the news release, I really didn't know how to get involved, because, well, the idea that I have that I want to see a high taken out inside this point of interest didn't really happen. So I knew we were definitely going to get some sort of retracement. Okay. Now I didn't know how to get involved, so the idea I went off of was, okay, maybe if I measure this move from top to bottom, I can just wait to see price get in in premium, like above the 50, and then when it gets there, I can look for a setup. So as you can see, that was nowhere near being in line with my classic model, but it was the last day of the challenge, so I had to take this. So when price got to premium and this happened, you can see left an imbalance here. I wanted to get in right there with my mental stop loss above here. I didn't really put a stop loss, but the plan was I placed a lot size such that if price gets here, I'll be 4% in drawdown. And this is how that unfolded. So it hit my stop loss, and then I was just out of the trade. Like I said, then why did I say hit my stop loss? It didn't hit my stop loss, but it just by here I was 4% in drawdown, and at this point I was like 5.16% in drawdown, so like 516 down, and I knew that it was over. Afterwards, it did come down here, and yeah, I remember the small, because I placed more positions as it was going up. So when it came down here, I was actually out of drawdown already, and actually in profit. But it was all over. So yeah. So basically, that was it. That was the price action, and afterwards they did this, which I spent some time studying, and I'm still gonna spend time studying, because after the fact, you can tell all of this was consolidation. Well, it was just a ranging market, and then there was news at 10. This wasn't the news at 10. Yeah, before the news at 9:30. Well, after 9:30, after the 9:30 open, they repriced back, took out all these highs, rebalanced the 15-minute imbalance we have here, and then just dropped and took out these lows. Approaching the sell side we had down here. So that was the price action for yesterday. As you can see, it was a bit weird because of the news, but yeah, it's over. So currently I just want to focus on studying price day to day and putting it all in my journal. I actually created a new compartment for my journal called Reading Price is Fun, where I'm gonna journal every single day and put in the price action that I observe. What am I saying, bro? Yeah, the price action that I observe on the day to day, just put it all down so I can study price properly. So I'll show you guys what happened today, the price action for today. One of the first mistakes I made while building my model was pattern trading. ICT doesn't teach patterns, so if you try to bring patterns into ICT concepts, it doesn't really work. And I was even doing this subconsciously because I didn't know that was exactly what I was trying to do. All the while, my model has been I want to see liquidity taken in London or liquidity taken um, in the Asian session, but on the other side of the market. So basically, if I came, I'd want to see this high taken out like this, and then see a point of interest created in the London session. The question is why? Why is that so necessary? Because in the past, I wouldn't even have considered the price action here. In my mind, there's no model, period. But that was a big flaw in my trading system that I only figured out when I started actually reading price. So if you read the price action, this is yesterday's price action. Like I said, the new idea I'm experimenting and eventually I'll definitely add into my trading is using the daily time frame to frame the narrative and making the entries on the 15-minute chart the same way I do on the 1 minute chart. So basically, if I took this trade on the 15-minute chart, I could close right here and then I'd be done, take this entire move and close here. And along the way, I could make an entry inside this small pocket here, inside this fair value gap here, inside this fair value gap here. I can just keep taking my classic 1 minute trade. You get the point? Yeah. So that's something I'm experimenting. But anyway, like I said, that was the first mistake I made. The second thing is, see how when price came into this point of interest, if price created a fair value gap immediately, it's most likely going to fail. That's something I only figured out from experience. One thing I was not accounting for is a liquidity grab. I mentioned this at the start of the video, and this is what I meant. Price taken out this high is the first thing I had to be looking for. You see, after price takes out this high, I don't even need a market structure shift. All I need is an imbalance. And the moment price gets in that imbalance, I can sell. And going back to the trades that I took that failed, it was there about 95% of the time. I could say 98% of the time. Even the trades that I won, it was mostly price taking liquidity like this, except there was no false setup for me to take before the actual move. So if you take this one for example, this would have been the classic, and this is the 15-minute chart, by the way. This would have been the classic idea on the 1 minute time frame that I keep making the mistake of. When price comes here, I'm waiting for this market structure shift, not even anticipating this liquidity grab. But that should have been the first thing to look for, you know till I realized this is the mistake I've been making. I was thinking it was time. I was thinking there was a guy in the comments, Raytik, I think that was his name. He left a very, very good comment, and man, that really, really helps my trading. So bro, I'm very grateful. Thanks a lot. I'm grateful for all the comments that I get, because it's not only inspiring, but this is one of the reasons I put myself out there. Learning is easy when other people are, sharing ideas with you. So thank you guys a lot. But yeah, you can see price is fractal. The same idea is on the 1 minute time frame reflected here on the 15-minute chart, and now it makes me trust it even more. So putting a little bit of brain cells behind building the narrative and not just waiting for patterns, that's what I should have been doing. So yeah, makes this point of interest valid, but this is the next thing that I've noticed. You see, here we've taken very significant liquidity, the low of the previous day. Let me name it as such. LOPD. Alright, so the low of the previous day, and one thing that I've noticed, just look at how the price delivery went on afterwards. Clean price delivery, the market just reverses and then hits here. So when this happens, I know the market is going to get a bit of resistance, it's something that I wait for now that in the past I wouldn't be waiting for. In the past, I'd just be waiting for this market structure shift, because price took out this low, because we've hit the point of interest. I don't even wait for the liquidity grab, and then leaves a fair value gap, and I'd be looking to sell here. Well, funny enough, this would have been the one time where this might have actually worked. If you're putting your stop loss above here. If your stop loss is above here, then you're getting smoked. ICT recommends third candle or swing high, but third candle is valid, means that if my stop loss is above there, it would get hit. If it was above here, I could have had a bit of protection, and I'm telling you this because I have hindsight. The price delivery happened, we took out this low, which was 15-minute sell side, took that out right here. We've taken significant liquidity, so some measure of consolidation is to be expected. And the way price reversed immediately meant that we're not going to sell off to the next drawn liquidity just immediately, which is the daily. We're not. That's not how these markets book. It's not just going to bounce and bounce and bounce. There's usually some sort of consolidation, especially on the 1 minute time frame. So um, when I saw all of these happening, and also we had news on the euro at 3 3 a.m. New York time. 3 a.m. New York time? Yes, 3 a.m. New York time. We had news coming in, so I was waiting for that. And like I said, I only trade these two pairs, but how do I know which one to pick? I use Euro GBP to figure out which one is more bearish or bullish. And today I just figured out that the pound was more bearish, so that's why I decided to trade. So there's fair value gaps here, but I didn't really care. And as you can see, price just blast through all of that, took out all these highs after the news release, consolidated a little bit, took these out, and then left this. So I was actually looking up here. I'm like, okay, this might be it. This might actually be it. But I'm not gonna rush. I'm not gonna put money behind this. I'm just gonna watch how this unfolds. But if I'm right, then this should be the trade, right? So I was watching this, and I'm like, okay. So as you can see, there's no market structure shift. It's just this price like taking liquidity, leaving an imbalance, and me getting involved, taking a sell, and popping off. See, this is something that I've seen so many times, but I need to keep practicing to warm up to it, to get more comfortable trusting it, because it worked out very, very nicely. Now, we had something similar in the EU, but you see how price closed outside the fair value gap? That would have invalidated EU for me. That rule still is intact. If price closes out of it, I'm done. I'm not looking there anymore. So on EU, we came there, did all the shenanigans. I was waiting for the news. So after the news happened, they took out this high, and then price dropped to the sell side on the daily chart. So there was nothing interesting on EU except afterwards they left this imbalance as well. So you can see not much has changed about my strategy. It's the same thing. It's just I've refined. I'm learning to refine the entry, and it's getting better and better. Same idea. So let's go in here and see how the price action was. First of all, I'm looking, since we've taken significant liquidity, I'm waiting to see some sort of, so this type of messy price action, I like that. And then we took out the low of this consolidation. See, I like it. If price reversed immediately with bullish candles, then I'd know that we could have a bit of trouble inside this point of interest. But we didn't come there immediately. Just take a look. See, right here, price left it. Messed around a little bit and left it. There was more liquidity down here being engineered. I'll show you what that looks like on the 1 minute later. But took out the lows of this consolidation and then rallied. So now I'm just waiting to see price getting the point of interest. It gets there. See how it tapped into it a little bit. So in the past I wouldn't even be considering this price move, right? But now I understand that I have to see this high taken out. It does that, and I'm just waiting to see an imbalance. They give an imbalance, a very small imbalance, but an imbalance nonetheless. To be fair, if I was trading this live, I would have been a bit anxious because it's very small, but still very valid. Sorry about the noise. Put my stop above this high and then hold to the next sell side. So you can see when price came down and did the swing, that's when I put the sell side. It was like I forgot to delete that and put it back, but basically target the sell side here, and price picks up the order right there inside that fair value gap and then redistributes to the sell side liquidity. So these are two trades that I missed this morning because I was working, but I'm going to journal them and study them. I love trading. I love this. I don't know how long it's going to take before I make the breakthrough, before it starts paying, but I can't put time on it, I'm just gonna submit to the process and just keep learning from experience, and I'll keep sharing the journey. If this inspires you, just like and subscribe, and Yeah, I wish you all the best in your trading, in your life, whatever thing you're pursuing. I hope it goes very well for you. And until next time, catch you later and be safe.